Welcome to Mark Arnold's Finance. I can't believe we're already in July. It's been such a volatile year for the stock market. So I do want to share what I bought in June and what I plan on buying in July and why. So before I get started, if you're new to my channel, be sure to subscribe so you don't miss an episode and join somebody that is transparent. So speaking of that, let's look at my portfolio performance as promised with every single video. Now we did have a green day in the market today, but it did not push my portfolio into the green. Though, as you can see here, I'm down a little over 1% at $434 in loss. I will say that Amazon is, it's been in the red for a while. It went to the green for a little bit, but it's back in the red. Meta is just one that I think will take a while. Tattooed Chef is heavily in the red. I mean, you can just take a look at this to kind of see how these stocks that I hold are performing. But overall, I think I'm holding up pretty well. I know a lot of people are deeply in the red, and that's a hard situation to be in, but you just got to stay disciplined in these times and learn from it. We all make mistakes, and that's what we got to do is learn. So let's get started with this video. Again, going to talk about what I bought in June, what I plan on buying in July, and plus I'm going to do and share my dividends, what I got in the month of June. It's a big month for my dividends, and I have collected officially the highest month yet. So it's very exciting, and that shows you what passive income, the power of it, what it does for you, and gives you some freedom. So we're going to talk about all this. Let's get into what I bought in June. So this will be a quick kind of round. I bought Vici. This is an experiential REIT. I think it has an extremely bright future, and you just got to give it a few more years. But this stock, I think long term, you're going to look back and be super happy that you bought right now. I bought VIXUS, VXUS, which is an international ETF. I just think this one is an ETF that you add slowly to, which I plan on doing. So maybe every other month or every couple months, because internationally, I don't think the economies are as strong as the US. So that's just one I'll add to slowly. Tattooed Chef is one that I added to. I'm so heavily in the red. I feel like I need to start adding in case it does go up pretty drastically. I don't think the stock will really make any moves for a couple years, so it's one I got to be patient with. But I want to add now that it's super low. SCHD, the Dividend Etf. This is, in my opinion, the best dividend ETF out there, and I've done a video on it, so be sure to scroll through my channel and find that. But it's just a long-term hold that offers diversity and safety, and it's just excellent, and it's paying over a 3% dividend, I believe, right now. T Rowe Price, I bought some of that in June. This is a high-quality financial management company, and I am bullish on it long-term. Home Depot, that's one that I think is pretty much Amazon proof, and I love this company. I think it's high quality. Meta, I know that's controversial, but I did buy some more. I'm very bullish on this long term. Amazon, I think, is going to grow massively over the next couple years. So I bought some of that. 3M is a high dividend paying stock that it's in the red, and I think with a high dividend, what it has now is just so attractive. I bought some. Warner Bros. Discovery. This is my only streaming play, and I think it's a quality one, and so I added to it because I got those off the AT&T spinoff. Then I bought FIDU, F-I-D-U, which is an industrials ETF. I wanted to add more to that, and FNCL, which is a financials ETF. Financials have taken a hit, and so I thought an ETF right now is where to put the money. And again, in June, I did sell my energy, half of my energy ETF, FENY, F-E-N-Y, and I sold it at its peak. I did a video on this. I put my strategy forth, explained why I did it. I highly recommend you watch that video. It's kind of a good thing to look at to decide, should I sell certain stocks in my portfolio, take some profits and redistribute them into other companies. So be sure to watch that video. So that's what I bought in June, quite a bit of stocks. I felt with the stock market down, I had to take advantage, so I did. Now let's move into what I plan on buying in July. Now we're going into a month where the stock market is still heavily in the red. There's a lot of negative news, with the inflation, with geopolitical conflict. There's a lot of issues going on with the airlines industry right now, and just so much that I think it's still an excellent time to be buying. So what I plan on buying is company one. more of T. Rowe Price. Again, this company, the way you value this is how much assets under management it has, and because the economy has gone down, so has its assets under management, which means we're getting the stock at, I think, a bargain price, because once the economy does turn around, those assets under management will go right back up, and that means this company gets to collect a lot of fees and take in massive profits. So I think now is the time to buy this company while the economy is doing bad, and when it turns around, then you just collect those awesome dividends and wait till the next time the economy dips to get an opportunity for a company like this. So T. Rowe is one I plan on adding. Number 2 is Meta. I know this is controversial. Most of you out there will probably say, why the heck are you doing this? But for me, I am bullish. They have about half the world's population on their different social media platforms, and they're a cash cow machine, and they're exploring the metaverse, which I am pretty solid has a bright future. Almost every major company is getting into this in some form or another. Meta was the first to market, and I think that's a great move to do in a new growing sector, business opportunity, whatever you might call it. And I think Meta is going to do extremely well long term. And again, sometimes when people are very fearful of a stock or bearish, that's sometimes the time to become greedy, right? And with Meta, I still am very bullish on this, and long term I think it'll make me some great money. So I'm adding Meta. Number 3 is Amazon. Now for me, Amazon is just a high quality company. I see this company everywhere in my everyday life. So I see their delivery trucks everywhere, more so than UPS and FedEx. They opened up a new distribution center here in Albuquerque just a year or two ago, and they're opening them across the nation just massively. I know there's reports that they probably overbuilt, but that's just going to be something that they'll utilize in the future eventually as this company grows. They have a sticky product, and I think that Amazon Web Services is something that's not highly considered, and I think that's going to be a huge profit generating machine for this company that people just aren't fully integrating into their analysis of this company. I think its future is very bright, and I am definitely buying Amazon. Number 4 is Microsoft. Microsoft to me is as quality as you can get. This company has the cash flows, it has a subscription-based service model. There's just a lot to this solid quality company. And I think that out of all these stocks I'll be buying in July, this is the one of the highest quality. And so long term, I am the most bullish on this stock of pretty much all the stocks in my portfolio as far as the quality, the consistency, and the growth, and the low risk. I think it has a low risk, right, factor. And so I definitely want to add now that it is in the red. And so that's something I'm wanting to do. And I'm showing the stock charts. These are the 1 years for all these that I'm buying, so you can just see how much they're in the red. Number 5 is Bank of America. Now this is a solid quality financial company. I think it's up there with JPM. You can go back and forth on the two. I just did a video comparing these two, so be sure to scroll through my channel and find that. I think it's a great video I put forth with great content and information. When I first bought this company, because I'm still in the green over 20%, I was over 70% in the green at one time. I did not think I'd get another opportunity to buy Bank of America because I felt after going up 70%, it's hard to buy into a stock like this. So if this stock goes below $30, I will be buying this stock pretty heavily because I believe right now with the economy being down, it's kind of like T. Rowe. I think the financials in general, once the economy turns around, all these stocks are going to go up pretty massively, and you'll be grateful you bought now. So that's my buy-in for Bank of America is under $30. Number 6 is SCHD. Now, I really do believe this is the best dividend ETF out there, and I did do a video, so be sure to find that as well on my channel. But this is just an ETF to pay you good growing dividends, and it's diversified with many companies, but not too many. I think it has a couple hundred where others have thousands of companies. So I think that allows more growth for an ETF like this. And yeah, it's just one I think I will always add to no matter what. It's my forever hold, and so it's one I'm adding in July. Lastly, this number 7 stock that I'm going to add is going to be Home Depot. Now, Home Depot, I believe, is one that Amazon can't really touch. So this is one that I'm, definitely going to buy because it has kind of that safety factor to it. Also, there's a lot of news going on about the housing economy crashing and stuff. I think that'll affect more home builders, but not these home improvement stores, because over the last couple of years we had an influx of new home buyers. And what do you think they'll be doing for the next couple years at least? They'll be doing DIY projects to fix up these houses that they bought. Because once you buy a house, no matter who you are, there's always something that you want to do, want to change and make it your own. So I believe Home Depot will really benefit from all these new home buyers over the last couple years. Regardless if the housing market suffers, I think Home Depot will stay strong. So that's one I'm going to add. So as you saw, as I was going through these, I was showing the 1-year stock chart. And if you saw, they all had one thing in common. They're all in the red from a year ago. So what I say is these are all quality, solid investments in my opinion. So if they're in the red from a year ago, I'm going to be buying. I just think it's that simple. Now, let's throw in my dividends. We will see here that in the month of June, kind of in the middle there, this is the highest month yet that I've earned dividends at $158.75. That feels amazing. That can pay a couple bills per month. That can pay a trip to the grocery store. This is what I want, this passive income where I invest in companies, don't have to do anything else, just sit back and relax and earn that money. And someday I hope this to be thousands per month. And the idea behind there is, hey, if I want to retire early or if something comes up, I have these dividends as a backup for me to help pay my life expenses, right? So it's an amazing thing. So year to date, I've earned $482.15. And since I've been investing for 2.5 years now, I've earned over $1,500, almost $1,600. So this is the power of, investing in dividend growth stocks. And it's just every year it gets more and more and more. So I'm excited to show you guys this journey. Always at the beginning of the year, I show you the dividends from the very beginning, compare it, but I'll be doing these brief updates every so often with my dividends. So what I want to say is I think we're really in a perfect time right now to stay strong, keep investing, and become wealthy. I think it's times like these where the people that don't let fear take over, don't sell out, don't stop investing, the ones that stay invested regularly are the ones that win in the end, because we're going to look back someday and be like, hey, 2022 was a year that I'm glad I invested. I'm glad I invested a little more than usual. I'm glad that I took advantage of some of these companies that were down 40 plus, 50 plus % that were still growing their revenue, still high quality. So I think it's times like these that really help propel us to grow that long-term wealth. And so you have to be taking advantage of it. You just have to. That's why I have been upping the money that I put in each month, not by a lot, because I'm not dipping into my savings. You always got to keep that savings set aside at least 3 months of your expenses. But if you have the means and have extra money, I think now is the time to put it in, because it is interesting to me. When stocks, were high last year, people were buying, right? But now that some of those stocks are down 20, 30, 50, 70%, people aren't buying. It doesn't make sense. If something is on sale, you should be buying it. You should be buying more of it and kind of loading the boat, shall I say. I think it's good to add to your companies now. Expand your portfolio, add diversification. So whatever you do, stay strong. And I hope you agree with the buys that I will be doing in July. Let me know what you plan on buying and why. I love to hear what other people are buying out there in the market, because it helps me to maybe look at a new stock I haven't looked at. So thank you guys very much. Hope you have a great day, and we'll see you next time on Mark Arnold's Finance.